Let's talk about these markets with Adam Linton from Bloomberg Markets Live blog, who joins us on set this Tuesday morning. Adam, very nice to have you with us today. So let's start with what we're seeing in bond markets here in Europe. They've been trading for 15 minutes or so. Yields a little bit lower this morning, and sort of maybe unwinding some of the higher yield narrative that we've been dealing with over the last couple of weeks. Some of it sparked by Isabel Schnabel, and then she was busy speaking again yesterday. What are we thinking about the European bond market story?
Yeah, I think at the front end, yields could potentially be capped for now. I mean, a lot of part of the story obviously has been global dynamics as well, but a lot of it has been some of these remarks we did see earlier in the month for Schnabel, potentially talking about the prospect of a rate hike sometime in 2026. And, you know, we've kind of seen her walk these comments back to some extent, and she was basically more kind of wanting to make the point that she doesn't think there'll be any more cuts, but she wasn't necessarily making the case for hikes. And then also, I think a part of the macro narrative that we've kind of seen over the past week is some people got quite excited about this Bundesbank report, saying we could see markedly stronger growth in 2026. But if you look at some of the Bloomberg survey data, economists are actually a lot more measured in their expectations for what we could see in the first half of the year. So things, you know, like domestic demand that could potentially be relatively weak. And as I've kind of mentioned previously as well, some of the structural issues facing Germany still linger. And also these fiscal plans, given the government situation there, they could also face a bit of a delay in implementation.
OK. I do wonder if someone's had a word with Isabel Schnabel. She wants to throw her hat in the ring to be the next ECB president. I wonder if someone's told her off for being too hawkish. But that aside, Adam, you've had the yen moves as well that we were discussing earlier in the programme, the euro strength helping the yen. Do you think that there's too much optimism priced into the euro at the moment? Yeah,
I think that is fair. I mean, part of it, obviously, that, you know, I mean, I've been kind of downplaying this rate hike story that we're looking at for 2026. I think that part can be parked as well. But a lot of it is, again, upbeat view of European growth. And I think 2025 has been a year of Eurozone resilience. But I don't think, you know, the economy is running hot. I think there's severe problems in Germany. The France fiscal situation is a source of concern. And also as well, we're not out of the woods on tariffs. Yes, we've been more resilient, but, you know, we need to see what the longer medium-term effects of these tariffs are, because they're facing an unfavourable trade situation, and I don't think the market's really pricing that at the moment.
You're quite constructive on the dollar. Is that because the US does well or badly? Because you can make links between either scenario to dollar gains.
Yeah, I think I'd say I'm constructive on the dollar because of, you know, relative growth prospects. I mean, if you look at a product like Dixie, basically that is almost a trade on euro-dollar with a bit of yen thrown in. And, you know, I think, OK, we've seen a bit of yen strength creep in recent sessions, but I don't think that's going to be sustained. And then I think, yeah, the US growth outlook, I think, is a lot more upbeat than that of the Eurozone. And I think that's a trade that kind of will potentially focus minds next year. And if, you know, US growth does hold up quite well, that could potentially temper some expectations for Fed easing in 2026. And I think that will be reflected in the dollar.
Just finally, given your view on ECB cuts, where would that leave European stocks in 2026?
I think the problem for European stocks is a lot of the upside has been driven by this phenomenal rally that we've seen in financials. And so I think you're looking for, you know, potentially European stocks to try to extend from somewhere. And I think that source of strength will potentially wane because it's been on such a long run. And also the lack of IT sector is also a problem for Europe.